All right, I guess it's time to see how my portfolio has been doing. I haven't checked it much this week because I've been kind of scared. Whoa, that's not what I was expecting. What's up, guys? It's Joseph Graff back at it again with another investing video. It's been another crazy week in the stock market. Coronavirus fears are at an all-time high, and it has just been insane how much the market has been jumping around. So here we are in my Robinhood portfolio, and one of the main things I wanted to talk about today is this crazy day that we had this past Friday. So the markets opened up almost 5%. Throughout the trading day, we kind of saw them drop down. And then at the end of the trading day, we saw a huge spike. So here I have the Standard & Poor's 500 pulled up. And as you can see, it opened almost 6% up and then kind of trailed off, kind of dropped off. And then towards the end of the day, it jumped up and actually finished the day up around 9%. So pretty wild day. We haven't seen gains like that in a long time. I can't think of the last time I've seen a portfolio up 9%. We have had a lot of volatility lately, but this is just crazy. So the reason the stock market jumped up so much at the end of the day Friday is because Trump went ahead and declared a state of emergency and announced a new stimulus package. The Fed also came out and said that they were in the second inning of their stimulus plans for the economy. So what that essentially means is there is a lot more aid to come. You all might have seen the Fed announce that it would be adding in $1.5 trillion into the market to kind of help out with liquidity concerns. Now, that isn't just them going in and spending $1.5 trillion. It's more like a large loan is probably the best way I can think of it. But anyways, it's been a wild week in the stock market. So as you can see, on the day, my portfolio is up 7.3%. Over this past week, I still finished down about 4.9%. This past month, still pretty far in the red, down 18.9%. Past 3 months, I'm down about 15%. Over this past year, I'm down 7.1%. And all time, I have more or less broken even. I'm down 0.2%. So, I'll share with you all my initial thoughts. So it's kind of sad and maybe a little upsetting to see all the gains that I have made since I started this portfolio completely wiped out. But to tell you all the truth, it's not something that concerns me. I started this portfolio with the goal of building wealth for retirement. And the way I see it, I still have 40 years of being in the market. I know the market, for the most part, goes up over time, so I'm not too worried about this drop. I feel like it's more of a short-term thing, and I see it as a buying opportunity. There are a couple companies that I have been wanting to buy, but I felt were overpriced, and now I'm starting to think about buying some more shares. Now, I've talked about this before, but the risk I would be running if I did decide to pick up more shares is we now are officially in a bear market, and these shares, these stocks that I buy could continue to go lower. There's no real good way to tell when the bottom is, so I just have to kind of use my best judgment, and hopefully I'll come out on top in the long run. So Waste Management is actually a company, I talked about it in a couple videos ago, and I said if it dropped to around the $100 range, I would consider picking up some shares. So it has dropped down considerably. It is down 15.5% in the past month. So it is something that I have my eye on. I'll go ahead and tell you, I went ahead and picked up some more shares of ExxonMobil. It's not going to be shown here in the my Robinhood account because I bought it in a separate dividend reinvestment plan account. It's actually through ComputerShare. So I put, I think, $150 in that. Figured I'd get some more The coronavirus fears have hurt them pretty badly, and then the huge drop in oil prices that we just had have hurt them pretty bad. So ExxonMobil is another one that I'm interested in buying. My Standard & Poor's 500 high dividend, low volatility fund is something that I would like to add to. Although, interestingly enough, usually the benefit of investing in a fund like this, a high dividend, low volatility fund, is the low volatility. So theoretically, whenever the market goes up a certain amount, the Standard & Poor's 500 high dividend, low volatility ETF should maybe track 0.8 or 0.9 of that gain. So it won't follow the Standard & Poor's 500 step for step. It'll always be just a little bit behind it. So the benefit is supposed to be that if the Standard & Poor's 500 drops a ton, that this ETF will not drop quite as much. But as you can see here, over this past month, it's down 23.7%, and the Standard & Poor's 500 is down only 20.7%. So a little weird. I think the main reason for this is the low volatility ETF holds stocks like ExxonMobil and a lot of other stocks that have gotten hit particularly hard by coronavirus concerns. So, but I still like SPHD for the most part. I really like dividend stocks. I've talked about that before. And not only do I like dividend stocks, I think there's a lot of dividend stocks that are trading at a good value right now. Outside of SPHD, I would like to just continue to invest some money in the Standard & Poor's 500, just get some more exposure to the overall stock market. I also really like IWM. So this is the Russell 2000 ETF. So this is the largest 2,000 companies in the U.S., whereas the Standard & Poor's 500 is just the largest 500 companies in the U.S. So this provides some more exposure to small cap stocks, which I like. Outside of that, I don't have too much else to say today. We'll go ahead and look at Carnival Cruise Lines again because, man, it is struggling. So about the only light at the end of the tunnel for Carnival and other cruise line stocks is Trump did tweet that he was asking them to suspend cruises for a month or so due to coronavirus concerns, which obviously is going to hurt their business. But he also said something along the lines of the cruise industry is very important, which may not mean anything, but it could also mean that he would be willing to bail them out if one of these companies were to go under. So I think that might be why this stock jumped up 17% this past trading day. I still don't know how I feel about purchasing shares of this. I just think it's going to continue to do poorly until all the fears of the coronavirus are more or less eliminated. So we'll look at ExxonMobil real quick since I told you all I did pick up some shares of that. So it's at $38.55. And I showed you all most of this earlier, but it is down like 37% in the past month. So interesting buy right here. Actually, the previous video I made was talking about some interesting stocks due to all the coronavirus concerns, stocks that have dropped down quite a bit. And I also talked about one stock that is considered to be pretty safe. So if you all want to check out that video, the link will be right down here. Outside of that, I don't think I'm going to talk about much else in my Robinhood portfolio. I think we're going to go ahead and jump on into my M1 Finance portfolio. All right, so here we are in the M1 Finance app, and as you all can see, this past trading day I actually did pretty well, up 8.7%, largely due to that big jump I talked about at the end of the trading day on Friday. Over this past week, I'm still down 12%. Over this past month, I'm down 21.9%. This past quarter, I'm down 22%. And this all-time chart is going to look pretty rough. I'm down 30%. So I'm going to kind of say some similar things to what I said about my Robinhood portfolio. I'm not upset that this portfolio is down as much as it is. In all actuality, I do have like $1,000 and about $500 that I've deposited in here, which is definitely a nice chunk of money. But I definitely think that as I continue to earn money, and hopefully here's when I graduate, I'll earn a little bit more income. I'll be able to put more money in this portfolio, and I'm hoping I eventually get to the point where I put, tens of thousands of dollars into this portfolio. And this, $200 loss on my $1,500 investment really isn't that big of a deal. So I'll show you all my activity over this past week. So starting from, we'll start at March 11th. I got 3 cents from Standard & Poor's Global Incorporated, 6 cents from PPG, 12 cents from 3M, 11 cents from Walgreens, 17 cents from Cross Timbers Royalty Trust, 6 cents from Main Street Capital Corporation, 4 cents from Pembina Pipeline Corporation. I've talked about this in previous videos, but Pembina Pipeline Corporation is an ADR. It is actually a Canadian company, I believe. So I get charged a fee on the dividends that I receive from them. So instead of 5 cents, I ended up with 4 cents. I got 4 cents from Realty Income, 3 cents from Sherwin-Williams, and 11 cents from Whitestone Real Estate Investment Trust. So the next thing we'll do is we'll look at my best and worst performing stocks of all time. And this should be really interesting because I think that things have been shaken up quite a bit. So we will filter by total gain. And as you all can see here, my best performing stock has been Digital Realty Trust. My second best stock has been Apple. My third best stock has been Crown Castle International. So out of this group, none of these particularly surprised me. Digital Realty Trust, they essentially have very little exposure to the coronavirus since they operate digitally, they operate online. I believe they own a bunch of web domains and similar things to that. Apple is still doing pretty well for me simply due to this fantastic run it was on this past year. I still think Apple's a pretty good company. They did announce that they are going to close down their stores internationally. So I could see their stock dropping here over the next week or so. But overall, I still really like Apple. And then Crown Castle, not too surprised by that. So now we'll go look at my worst performers. Surprisingly, ExxonMobil is not in this list. So Interplus has done really bad for me. It is down extremely far. Kind of blows my mind how low it's gone. Energy company, of course, it's going to get hit hard by the coronavirus concerns. This 98% drop seems a bit extreme. I have a hard time believing I've lost that much on it, but that could be right. I'll have to go back and double check. Capitala Finance Corporation, I am down quite a bit on that as well. I may have to go back and double check these percentages. These seem really high. It's kind of hard to imagine that I've invested like $24 in these stocks and they're down to $10.52. I don't know how they get a 98% drop from that. I would think it's more like 50 or 60%. So anyways, I'll look at that, do a little more research on that. And then Boeing has also done pretty poorly for me as well. So not too surprised by any of these. It's been a rough week. We all know it's been a rough week. But I personally think now might be the time to buy. I've talked about this in previous videos, but my personal strategy is I like to buy in increments on the way down. So what I like to do is I like to figure out what I think a company is fairly valued at. And if it's at that price, then maybe I'll pick up some shares. If it's below that price, I'll try to buy more shares. And if it's been declining in value recently, what I'll do is maybe I'll buy like $10 worth of stock today. If it drops another 5 or 10%, maybe I'll add $20 more. If it drops another 5 or 10%, maybe add another $20, $25, and kind of dollar cost average on my way down. Now, I would only do this with a company that I do like and do think is a worthwhile investment. If you're just sinking money into a company that is inevitably going to go bankrupt, obviously this would be a bad strategy. But that's just my personal strategy. I do think that, I really hope that some of these concerns about the coronavirus will be alleviated or at least diminished here in the next couple of weeks. I'm really hoping we get some good news about a vaccine or some better tests for the coronavirus. And of course, my heart goes out to everyone who's been affected by the coronavirus. It's a nasty thing. It's a nasty disease. And I think people are certainly right to be fearful about it. So that being said, I think I'll wrap up today's video. So I appreciate you all watching. Stay safe out there. If you like the video, please hit that like button. Please subscribe to the channel. And JGraph out.